Yeah, I guess welcome everyone. So this is workshop number 3 on pitching. And then I guess yeah, we have Zhao and Rustin from AtomicVC to talk to us about that. I guess I can hand it off to them. Thank you so much for joining us.
Yeah, thank you. Yeah, really excited to see everybody. Happy Saturday. So we do have a short deck to go over, and if we have time, we'd love to do some breakout rooms or a more interactive part of this workshop. So what we'll do first is just a quick introduction here. So let me share my screen. Okay. Go. Can everybody see this?
Yep.
Slideshow? Is this okay? All right, perfect. Well, nice to meet everybody. So I am Zhao, and I'm on the business operations team at AtomicVC. And what we do as a company, if you've had guys were in the workshop with Sharon, is that we're a venture studio. So we both fund and found a lot of our early stage companies. And what we do is after they've hit certain metrics and traction, we start pitching them to external investors. So my role is around prototyping and creating early concepts, but also presenting ideas and ways for us to start to create companies. And I'll let Rustin take it from here.
Hi, everyone. I am Rustin. Nice to meet you all. Very similarly to Zhao.
Hello?
Can you guys hear me? Can you hear me?
I can hear you, Rustin.
Okay.
Yeah. I think we have some technical difficulties. I can't tell though.
I can hear you here. If anyone has any issues, just send something in the chat.
Okay, cool. So similar to Zhao, my focus is on prototyping. I really like to spin things up as quickly as possible within a week, a couple days to test ideas as close to the actual concept that we are doing discovery about as possible. So Zhao and I work together on that, and we that's pretty much our main focus at Atomic.
Yeah, Rustin, do you want to talk about who you've pitched and what that was like?
Yeah, sure. So before Atomic, I was working on an at-home strep and flu test, and I have pitched Founders Fund, Mark Cuban, Precursor Ventures, and also JD Ross, the co-founder of Open Door. So kind of using those past experiences and sharing those insights with you guys is what Zhao and I would love to do today.
Yeah. So yeah, Rustin's definitely a storyteller. So if you guys have any questions, feel free to just jump in and ask. And so let me move forward here. So the basic premise of kind of our work and the way that we think about pitching is around pitching to venture capital. But everything I think that you do, whether it's sales or something like that, that is also a form of pitching. But for today's kind of workshop, I guess what we are talking about specifically is if you have a very early stage company, a concept or a design that you're passionate about, and how do you pitch it to an investor who is going to put, whether that's an angel or whether that's someone that's early stage venture, asking them to put money into you as a form of equity rather than debt. So you can use that money to kind of scale your company and kind of build the company together with the person that you're pitching to. So let's say you have, $100,000 to put in the to invest or to put into a company. This is what VCs are thinking about. And what you have to realize is that kind of in the venture industry, most companies go out of business. So people in venture are very, very, very cautious around the ideas that they support, and it's usually very stringent in terms of how they determine whether they would support you or not. You can see here like 65% of these companies, they don't return anything, and most they return 1%. And so these people are betting on big ideas and ideas that work, and that is why pitching is incredibly important when you're speaking with people in venture and kind of getting them to invest in your idea. And What's interesting here is that there are different expectations when it comes to pitching and what you need to see by stage. Like if you're at a startup, you're very much focused on, finding the right market, finding the right product. If you're scaling up and you start going to, later stage venture funds, growth funds, private equity, it becomes very different of a pitch. You have more history behind your company. So today, really the focus is on kind of the startup phase because there's not a whole lot of history behind you. How do you get someone to trust your idea? How do you get someone to trust your design, your product, and distribution strategies to make sure that, they'll put money into you? So yeah, there's a lot of things that, we care about when it comes to pitching. Their value proposition, customer relationships. If you've taken an entrepreneurship class at Duke, this is something that you probably have seen. It's the canvas, the business model canvas. But what's important, I think, in all of this is that you are the person that's controlling the narrative when it comes to talking about your company. It's up to you on what information an investor needs to know and what information is critically important that outweigh everything else. And so when I think about pitching, it's about boiling down your ideas and your companies into nuclear atomic pieces, no pun intended. And being able to do that, you'll be able to get your point across, and investors will know why they can believe in you, because half of pitching is selling, right? If you're selling your business or you're selling a product, people have to believe that you can distill and have people understand where you are. So, Rustin, I'll let you take it from here.
Awesome. So Zhao and I are going to go through the kind of 6 major components of a good pitch: problem, solution, go-to-market, market sizing, competition, and team. We'll go through each one of these. We'll show examples of good kind of slides, bad setups, and then we'll have breakout rooms that Zhao will talk about. So first off is the problem. Zhao, you want to go through the next slide? So first off is the problem. This is probably one of the most important components of the pitch, because it's going to be one of the first things that the investor sees and kind of hears from you. If you want to be as kind of clear and explicit on the slide as possible, and the better job you do at this, the more the investor can put themselves in the shoes of the person who faces the problem. And that way they can really feel it and kind of understand that your solution is a good solution for this problem. So, and all of this is, you're really storytelling, right? You do not want to be segmented. You do not want to be, you don't want to sound boring. You kind of storytell, and specifically around the problem, you start with, this X person tried something, and this is what they felt, because there were no, the solutions out there, there are either bad solutions or they were non-existent. So if you really, again, if you explicitly show who the person is, like what their demographic is, what industry they're in, whatever it may be, and you explain what exactly is stopping them and what exactly is the pain point, and then you subtly kind of lay out what's existing just doesn't work. That's really what you want to do on this problem side. And you want to make sure that you do not talk anything about the product here. This slide is focused on what are you actually tackling, why is it important, and frankly, why is it a pain point? So this is one example of a bad problem slide. It does not kind of put someone in. It does not put the investor in someone's shoes. It's vague. It does not really talk about pain points. It doesn't kind of hone in on something. And again, it's just boring. A slide like this does not kind of motivate someone that there's a problem that you're tackling. Another example of kind of a bad slide and a bad example, you're kind of showing, okay, this is the process that a person that, marketing agency needs to follow. It's manual. Okay, sure, it's manual, but what is the actual pain point? Is it just that it's manual? So this is way too high level. It does not kind of specify who's facing this pain point, what the pain point is. Again, vague. Another example of a pretty bad concept around a problem that they're solving. Both of these, slide 1 and slide 2 are not great. Again, vague. This is kind of obvious. Does not really talk about pain points, and again, does not demonstrate who is facing these pain points. And so this would be a good example of a problem slide. You are talking about who it is, what the problem is, specific things about building meaningful relationships, all it requires. And it talks about the current tools, why they are not a good solution. And it talks about it at a high level, and then it talks about an email as well. So this would be a good example.
Yeah. So yeah, before diving into the solution, right? Just reiterating a little bit on kind of what Rustin has described here. This is the single, I think, one of the most important things when it comes to a pitch. And it doesn't have to necessarily be in a deck per se, right? You have to articulate the problem that the people that you're selling to are facing. And if you don't articulate that well, you want to steer kind of these investors in a direction where they are already thinking about the solution, even without you presenting yours. And that's when kind of you can really win by showing something truly unique when it comes to a solution, which is usually what follows the problem. So it usually starts with problem and solution. So here's how to do it. It has to be also very, very succinct. You have to make this pop out, right? List a few key benefits, 1 or 2 maybe product screens. If you have a quick demo, that would be very cool, especially when you can compare it against kind of what we talked about in the problem. All of this works together. If you can show that the status quo is very, very tedious and yours is just so much better, then it becomes much more convincing. So 1 to 2 product screens. You should explain kind of what people take on your app, and then what are the outcomes when it comes to their actions. So list the key benefits and features. So here's a good example of a solutions slide. And you can see that there's this app called BGet, and it pairs kind of light product management tools with modern, like a modern writing process, right? Ties the problem in 1 sentence. And then you can see that this is the product, right? You see a dashboard, you see projects owned, it ties together. Here's an example of maybe not as good of a solutions slide, right? Yes, it tells you, oh, it's a mobile application. Yes, it's a website. And Foursquare, very large business, by the way, right? It's not showing you exactly what it is. Yes, you can use it to find friends. Yes, you can navigate a city. It's unclear how someone is going to use it. And this is kind of where, a good design or a good product, 1 or 2 slides could come in. This one, going back to mixed panel, also not amazing, right? It's like analytics software, but what does that look like? Unless you intend to follow up your pitch with kind of a longer demo or something that's a little bit more focused afterwards, this is what you use to kind of maybe intrigue somebody, but just even showing a few, photos or demos can do a long way for the solution. So yeah, this is interesting, right? It kind of lists out what you do. Simple install, like Google Analytics, customer browsing, boom, boom, boom. I wish it showed a few more photos, at least for me. But here's kind of where you want to dazzle someone with the way that they didn't come up with. If they like they should have the reaction, wow, like I didn't know that you could solve it this way, or the solution that I'm thinking about just seems more tedious than what you have. This is kind of where you be slick and you kind of present to somebody your solution in a unique fashion.
Awesome. So go-to-market. Go-to-market is one of the most important things you can come to a pitch with. Anyone can create a product, but you likely won't have the resources to create a good product or an amazing product. So you will need to have a strategy in terms of getting your product in the hands of your users. And if you don't, your startup will fail, no matter how hard it was to build the product, and no matter how good of a product you may have built. So when you're kind of, if you're creating a pitch deck, you really want to talk about your unfair distribution advantage. This can be, there could be so many different things that you can do to have unfair distribution advantage. And it really, sometimes it varies per industry. But this is a very important factor to keep in mind when you are talking about your go-to-market. And there will be some examples after this. You want to talk about the channels that you're thinking about, whether it's online, in person. Usually you want to avoid talking about spending money on ads here because that's nothing special, it's nothing unique. And paid marketing is extremely expensive and difficult to kind of unlock. So coming to this with data, coming to this with examples of previous similar distribution strategies that have worked, that's what you kind of want to come to the table with. And of course, if you have any initial traction, even if it's 1 or 2 or 3 or a couple customers, anything is better than zero. So even if you can get friends that are users, or if it's a B2B product, if you can get a friend, a parent's friend or someone like that to use your product, that is always better than coming to this with zero. This could be a good slide if it's done right. Again, if you say launch app and that's it, and you just give traction, and you give dates on where you want to see traction and growth, that's not very helpful. If you provide tasks that are really specific and strategic, and it's clear that these are it's not a paid ad, or it's not things like that, that can be something that's helpful. And then of course you want to show how you're going to be measuring the traction, how are you going to be showing it, what's going to be the KPIs that you're looking for to get the next unlock, the next fundraising, the next key hire. So kind of showing a slide somewhat similar to this, where you have clear dates and clear numbers, that is something helpful to have. Although you want to keep in mind that most investors know that these numbers that you come to the table with this early on, they don't mean much. So you don't want to spend too much time on these numbers. See, content marketing and press, very vague, near impossible for you to do right when you're a very early stage company. Product hunt is a good kind of distribution strategy, but it may fizzle out. You cannot just solely rely on that. Back in the day, a lot of people used to say press. It's not something that startups go after as much in the very initial stages. But you never want to talk about SEO and press as your core distribution strategies when you're just starting out. That's just setting yourself up for failure. This is kind of a good example of showing traction, right? Even if it's 8 pilot companies, that's super helpful to have versus 0. That at least shows there's somewhat traction, and you have these companies where you can learn from. You can go to and show new product features. You can ask them how you can further solve their pain points. You can ask them how they can do better. Even 8 customers, that's more input than 0. If on this funnel, saying you have engaged prospects, it's going to be very hard to go from 8 companies to, you have 442 engaged prospects. So you kind of want to be realistic with your go-to-market strategy. If you're talking about the B2B side, you don't want to just throw out numbers, because, if you're industry specific B2B product, you can create a funnel with high to low numbers. And that's not very helpful. This is another one that's not helpful, right? Hiring people. When you're early stage startup, it's going to be either hard to hire people, at all, or B, hard to hire good people. So you don't want to talk about your distribution strategy being around just hiring especially marketing growth people. That just doesn't add anything.
Yeah. And so, yeah, and on this, that kind of segues to kind of talking about the market. And, there has to be a market that you go to from your go-to-market and distribution, right? And it's not always very clear in terms of how big that market is. And like a big mistake that people make in pitching is that they overestimate how big their market is. And as much as, this is from kind of a comic, our perceptions of how big things are is very interesting, because 1 billion, 100 million, 1 billion actually seems smaller for some reason than 100 million in our perceptions. And so, it's about the way that you present this and being realistic, because every market in the world is over $1 trillion. You can make that argument, but the important thing here is being able to reflect your go-to-market, what Rustin talked about, into your total market opportunity as a framework, and the related data points that support it. So this is like more classic, maybe research that you can do. This is what, we think about when we say, oh, the pets industry is over $200 billion, and we're going to go for the luxury pets market. That's our go-to-market, right? But you got to have kind of ways to support it and not kind of exaggerate too much. Right? So there's both a top-down way and a bottoms-up way to think about market. And top down is you can think about the industries, how big they are, and bottoms up is the way that you think about your distribution and the way that you're going to sell your product. For example, if you're a SaaS company and you think about market like, I'm going to sell to 1,000 companies for $1,000 a year, right? That gets you to $1 million ARR. So when we think about that, it's bottoms up. So you have to do both and see where it meets in the middle. And that's kind of how you start to pitch your idea, especially when you get questions, right? So this is not great. Can you guys tell why? And I know we didn't make this incredibly interactive, but why is tens of millions, the size of the tens of millions bubble, that's almost the same size as 1.5 billion? It's misleading. Also, what does total spend mean? This is just not specific enough here. Right? It's a good market size. Market size is how investors think about how much they're going to exit for. But this also doesn't talk about how you can expand your market. So all of this you have to provide context for. It's another example of something that I see very, very often in pitches, and the way that people talk about this. Not amazing. Not the best way to do this. TAM, SAM, SOM. Who cares about what that means? TAM, yeah, I think everybody gets TAM, but at least in my time in venture, I've never heard anyone say SAM or SOM. It's what you're going to go after in your initial market. Talk about that, and then talk about the big opportunity that exists beyond that, and why the thing that you're going after unlocks the big one. So this one, very, very non-specific here. $12 billion market. It's going to grow to 93 billion. What does that even mean? Is that everybody? Who do I go after here? Right? This is not very clear. So unless you're explaining this very well during a pitch, it's not, this is not a great slide. This one's better, right? Talks about things in a more broken down sense. We know how many publishing industry publishers are there. We know how many of the kind of the SEO people are there, right? We know that the software marketing, see, this is top down. Software spend will grow. This is bottoms up. We can serve 1.3 billion of that space. And then it goes ahead and breaks this down. What ties this together with a go-to-market is You can say, I will only go after traditional publishing because I am an industry expert and I myself have 100 people that I can sell today. And that is X amount of money, right? To an investor or a VC, that's very impressive. So yeah, I'll stop market here and then pass it on to Rustin for kind of competition.
Awesome. So now we're going to talk about competition. There are several ways to kind of visually demonstrate who your competitors are. The number one thing to keep in mind is you can never come into a pitch and say, there's no competition, right? There may not be a competitor to exactly what you're doing. And even then, sometimes there are. But there may not be that company, but there are always companies that are in a similar vein or similar, kind of similar problem set. And you want to demonstrate that you have a good grasp of what they're doing and how you're different. And the way that you do that is you kind of demonstrate how you, on this kind of 4-quadrant chart, you demonstrate that, these companies might be doing this, but not this. They may be doing this, but not this, but we are doing all the above. And the better grasp that you have of your competitors, the more kind of confident that your investors are that you know the industry, you know the problem that you're solving, and you know that your solution is differentiated, which ultimately leads to a successful startup and growth. So this is an example of a very bad and confusing and just convoluted way of demonstrating your competitors, right? I almost have no idea. I mean, you see these bubbles, but you have no idea where you sit in relation to all these different competitors. And then again, you never want to say we don't have any competition. That is going to be an immediate red flag, kind of shows that you don't really know what you're doing. You don't have awareness of the industry. So you want to avoid that at all costs, even if it, and some people think when they're first, pitching their startup, they think that, oh, if they list a bunch of competitors, it signals that, that the market is saturated or that, there's already these solutions. That's the wrong mentality to have. Everybody knows there are competitors. Investors know that there are going to be similar companies. And again, the more you know about the other companies and the more you know how different you are than those companies, the better. And by the way, you never want to be in the position where you're pitching a startup and you have your competitor slide, but you don't mention a startup that investor knows about. That's kind of a red flag that you don't know what you're talking about or you don't know the industry. So this is a great way to kind of stack you against competitors in terms of very clear value props. This is an amazing way to kind of break this down. When you're doing this, you don't want to have every single value prop that you have, and you want to condense this into the kind of 4, 5, 6 core elements. But again, this is a great way of showing that, hey, there may be competitors that are doing something similar, but they're not achieving every single one of these value props that we know are important for the customers that we're going after. And then this was another example. This is another example of what I showed initially, but this is a pretty poor layout of the four quadrants. And again, it's not adding much to this. An investor can't look at this without your narration and take much from it. Free versus paid is not a great way to set up your quadrants. But frankly, the best way to do it is the previous slide because it really clearly goes down the value props and how you go above and beyond the other solutions. And again, not a great kind of demonstration of a competitor slide. You're just listing different tools and without you want to make sure that your slides can be absorbed and reflected upon and kind of consumed if you're not giving a narration, and this completely fails at that. This is just listing a bunch of different companies that do different things. And it's hard to get a gauge of where you sit in relation to these competitors.
All right. Yeah. And I think the last thing, and before we kind of dive into just kind of some questions, but also breakout rooms, is the team's very, very important. Who am I talking to? Why is it you? you guys are all Duke students, you like very smart, right? And now it's time to show off kind of the stuff that you've done in the past. This is what the team is made for. What have you done? Did you work at Google? Did you work at Facebook? Those all help because it shows that you're smart. You know that you can be scrappy, right? And one of the things that, and Rustin actually shared this video with me. It was Keith Rebois, who is the founder of one of Atomic's portfolio companies, Open Store, also the partner of Founders Fund. What he said was, at these very early stages, aptitude is much more important than kind of seasoned experience, seasoned vets, especially when everybody's trying to figure it out. In a startup, everybody's doing everything. So so if you can show something impressive, that everybody's scrappy, and there's like a history to prove that type of scrappiness, this is how you win here, right? This is not like consulting slides from like McKinsey and Company. This is, you have to show that you've done stuff, like you build stuff. You can be the person that scales this company and prove that you can, right? With your kind of name, current title, company logos. So investors may ask for these things. You don't need to talk about these like very, very specifically in a pitch, especially very early on, like business model, financial projections. Use of funds you should talk about, but these are also things that you can communicate kind of additionally, and you can add that to an appendix. But kind of what kills most deals in pitching is an incredibly tough market, incredibly saturated market. There's no way to kind of noodle through the type of competition that exists. The team's way too inexperienced. And when it comes to way too inexperienced, it's like saying, let's say you were a person that was an engineer at Twitter, and you really, really want to start a company that's completely different, like completely in a different space. You've never built anything in that space before, other than the fact that you were an engineer at Twitter, which is a very good thing, but you have to be able to show it. And if the VCs get an idea that you're super inexperienced and won't be able to scale that company up, then it becomes harder, right? And there's a lot of risks sometimes with these companies, maybe co-founders fighting with each other. Sometimes people negotiate on the valuations of their companies. Yes, in different markets, the valuations are different. In the Midwest, the valuations of companies are lower. And if you're over negotiating in a market where everything's lower, you're setting up yourself for kind of failure. Or, like you're in a very competitive venture market, what do you do then? Like, are you even negotiating well, right? There's also a bunch of these control provisions. And, if you don't have a lawyer do all of your docs, lawyers are important, but if they're the ones negotiating for you, you're probably not doing it right. And don't say this. No one likes to hear this. Investors are all lined up. What does that mean, right? Especially when they aren't, right? You could say it if they're actually lined up, but if you go up to someone and say, I know Sequoia is lined up, I know Greylock's lined up, they're about to invest in us, it's great. And then you say, we've spoken several times, they're super interested, and they're like, they'll get back to you. The investor you're speaking to is probably connected, and they're going to reach out. And if you're not getting a stellar response from the venture funds that you mentioned, don't put them in your pitch. Don't pitch like that investor. So yeah, I think that's really important. But yeah, I think before we dive in, could we answer any questions for anybody? Kind of the way that we were thinking about breakout rooms is if on Zoom, we could just do like 2-person or 3-person breakout rooms. And for the in-person, if you could just pair up. And then, if one of you would like to just pitch a problem and solution that I know you guys are working on in IDEATE, I think that'd be great. But before we dive into that, I guess, could we answer any questions? I can't see anybody, so. Also, I don't know if this chat, feel free to put it in the chat as well.
So this screen is like
Hello? Yeah? I can't see anybody, by the way. Any questions? Feel free to put it in the chat or come off mute.
Zhao, there's a question for you in the chat.
This question, okay. Okay, don't have relevant experience. Okay, so the question is, if you don't have relevant experience, but have built unique solutions and tools, how would you present this in your deck? A really good question, Robert. So the way that kind of you could do this is, I think what's really cool is that when you pitch somebody, it's not rigid, right? Yes, you'll have a deck, but when you actually talk, you're talking to these people. It's a conversation. It's not like an extemporaneous or like an impromptu speech in which you're like telling them everything and they're just listening. So what you could do here is when you're talking about the team, or if the unique solutions and tools are anything relevant to kind of the thing that you're pitching, you can say that, I have built stuff that are direct, are in direct relationship with kind of the thing I'm pitching. And here are the outcomes from that, right? Or in the team, I am a very, very scrappy engineer. I've built multiple tools in various different industries that solve the problem. And each of them did something. And that's why I'm going to win when it comes to building this product. That's what I would say. There's a lot of ways you can fit this in. The pitch is not, I think there's like the idea that the pitch is like Shark Tank, where yes, it is in some ways. When you're applying for accelerators and things like that, you can always squeeze it in. But in most cases, a pitch is a conversation. You're sitting across from JD Ross, for example, right? Rustin, you're literally sitting across from him, and you're pitching him an idea, and you're going through kind of your problem, your solution, your market, and it's more of a conversation.
Got it. Thank you so much for clarifying.
Yeah.
Appreciate it.
Anybody else have any questions?
Quick question. How long should a pitch be?
Right. So yeah. So if you're meeting one-on-one with a VC and you know that it's just your team and that venture person, it could be anywhere between 30 minutes to 1 hour, because it's a conversation. But if you're pitching to somebody in a sense like Shark Tank, where you literally only have 60 seconds with them, you're constrained. So squeeze everything into 60 seconds, right? There's two different types of pitches. If you're pitching for accelerator, even if you're pitching for Y Combinator, it's not a pitch per se, right? Where you're like Shark Tank. You're meeting with the partners, you're talking to them about your company. Those usually have like a time limit of 15, 30 minutes of conversation. Maybe a little bit longer. Depends on how you do it. But yeah, did that answer your question?
Yeah, it did. Thank you.
Yeah, I mean, Rustin, how long were your pitches to like to everyone you pitched to? Like Mark Cuban, how long was your pitch for Mark Cuban?
I would say I kept them around 15 minutes. It does depend on the stage of company that you're at, and also it may depend on the stage of company that you're at, and how much money you're asking for, and things like that. So there's some variables. The earlier you are and the more kind of vague the ideas, the more collaborative you want to be, and leave room for discussion. So I'd leave my pitches around 15 minutes.
Mm-hmm. Yeah. Any other questions? No more questions? Well, If you have any questions, you can always just ask us kind of as we do kind of this next session. I'll also leave my email here and Rustin's email in the chat in case anybody wants to follow up with us. But yeah, Naomi well, what do you guys think? Do you think we could do a quick, or Raymond, do you think we can kind of split this a little bit into a breakout room for everybody that's online? And then basically the goal here is, yeah, one person, you just pitch your problem and solution. Let's say you don't have a deck. Are you able to pitch it and just get some feedback? Is kind of what we're asking for. And we'll turn these slides back to the problem and solution and the way that we think about that. Does that work? Yeah, and if you're physically in the room, if you could just pair up, I think that'd be great.
Okay, perfect. I'm gonna open some breakout rooms now.
Perfect. So yeah, I think I really appreciate everybody kind of joining our session here. Once again, we will share kind of this deck. Well, we already shared this deck actually with the IDEATE team. So so if anybody has any questions kind of regarding kind of pitching, at least in the venture space, I know you guys are all focused on projects for social good, for IDEATE. Instead of pitching from a distribution standpoint of profit, right? It'll be pitching on a standpoint of how much impact and what is a problem that you're solving from an impact perspective. So it's all the same. Instead of dollar amounts, right? It's maybe the number of people affected. So I think for all of this, like the overall kind of way to pitch, at least your idea still applies. And many times you might not even have a slide deck. And one thing that's really cool, I think, that happened at Atomic is, one of our companies, Hems and Hers, is, initially, I'm pretty sure the founders didn't even have a deck when they were able to pitch the idea and kind of scale this company very, very quickly. So when you pitch, as long as it's structured and, it has all the elements that we talked about, I think that's enough to kind of excite people, get it enough to excite people, and then be able to back it up. That's how you kind of propagate some of these ideas and raise money for them in the end. So that's kind of my closing statement. Rustin, anything else?
That's a great closing statement. Just remember, your storytelling. Try to put yourselves in the shoes of the investor as much as possible. Be very clear. Be very try not to use vague buzzwords. And yeah, that's kind of my advice.
Great. Well, that should be it for us then. Thank you everybody for kind of joining this workshop and session. And yeah, best of luck tomorrow. And yeah, excited